Today, I'm here with Zack from Phipps, Brittain Real Estate, and we've got some really interesting discussion for you on the various market segments and changes that we've been seeing in the Waterloo region.
Listen up. This is the goods right here. Sales volume in Waterloo Region down more than the Maple Leafs. I had to do it. The poor buds. For more data in Waterloo Region, inventory's inventory. We actually freaking have inventory, but no buyers want to buy into the inventory. So 75% increase from 10-year average. What's crazy, we're going to show up the chart in the next slide, but we're a buyer's market. We're seeing duplex, triplex, fourplexes on market. You could just buy with 20% down and you could be making 500 to a grand a month, especially if you're managing them yourself or you're house hacking it and living in one of them.
Welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, your host, and today I'm here with Zack from Phipps, Brittain Real Estate, and we've got some really interesting discussion for you on the various market segments and changes that we've been seeing in the Waterloo region. There has been a ton of changes, and we have a lot of data to unpack today, and it's not just going to be all about staring at, a wall of numbers. We really dive in and uncover what you guys might be able to take away in terms of strategy and tactics while looking at the various segments and their changes. And I think by the end of this video, you're going to have a better understanding about how you might approach actually making better offers in the Waterloo region. Or if you're looking to sell, I think you're going to have an idea as well what buyers are looking for and what are some of the takeaways about how you could sell in a market where there's a lot more inventory and a lot more opportunities. So I'm really looking forward to diving into this approach with you guys and Zack. So Zack, welcome back to the channel.
Oh, Adam, thanks for having me today. Uh, Working through slow internet technical difficulties, but we got a ton of data and not like oh my God, I'm hammering you guys with girls with numbers and it's just, mundane. Like we have had big changes in our market. I have a feeling that like people in Ontario real estate are used to like huge swings in like even month to month or like every quarter to quarter numbers, but like we are seeing crazy changes in Waterloo region and a legitimate shift in dynamics between buyers and sellers, and then investors really just kind of sitting in the wind waiting for those sexy deals to come up, really considering the short term kind of risks and what's going to put them in a position to succeed. So we're going to deep dive that. I also have deals that work in today's market, both small deals and bigger deals. Just a quick hit on what those numbers kind of look like for deals we see that are working, and maybe a few tips on what to focus on as an investor towards the end of the video, and a couple deals at the end of the video we want to share with you guys. So that's what we're going to go through today. It's been, we're in the thick of the spring market, and there's a lot going on between maybe people shifting their expectations on both the buy side and the sell side, and we're gonna get into that. But also, a lot of buyers and sellers looking to try and make things happen out there, and a lot are struggling. Buyers are struggling to find really good deals that make sense, even though we have more inventory on our market now than we've seen in years. There's a real disconnect between what buyers think makes sense and what sellers want. And so our market's been spending the last 2 years, year and a half, really trying to find where that middle ground is, and we still haven't found it yet. So we're going to be talking about that in detail. Before we get into the presentation though, and some of the numbers, I had to put this up. I'm not even a big movie guy anymore, but there's a movie that way back called Lucky Number 11, and there's a really cool little kind of like two-liner in the video, and it's the hitman saying what a Kansas City shuffle is. And Kansas City shuffle is when everybody's going left, but you move right. And I feel like we are approaching that for investors. Is there's been so much like international, national, and local like news and fear and changes and adjustments in prices and expectations and regulations and short-term strategies for local municipalities. And all these investors are just like, Jesus. And a lot of them are looking at how confusing the market is right now and how confusing it has been, but they've lost their eye on the prize. So I feel like everybody's focusing on the bad, which I think is important as a homeowner and as an investor to understand that and consider it, but that is overshadowing the opportunity in our market. So for those of you that are new, if you want opportunities in the local market, Adam, we do our weekly investor hot list. I go through this personally every month. It's not a robot. I'm not spitting out random deals. If we have inventory that we have that we think are good opportunities, if we have upcoming and off market inventory, we share those as well. And we do have other agents and investors bringing us opportunities before they fall under contract with other people or hit the market because they know we have a list of qualified investors and buyers. So if you're just starting to look, if you're saying, hey, Zach, I'm ready to buy a deal now, I just need to find it, and you're interested in Waterloo Region real estate, bang, Investor Hot List is the place to go for you. Bang. Now, Adam, this is where me and you are going to get into the weeds on it a little bit. So if you guys are, you got the YouTube video on in the kitchen, or you're pretending to work from home today and you want to get the goodies on Waterloo Region real estate, listen up. This is the goods right here. Sales volume in Waterloo Region down more than the Maple Leafs. I had to do it. The poor buds. See you later. All you Leafs fans out there. A lot of you losers coming down from Toronto. I love working with you. I would love to talk real estate, but you want to talk about the buds, kick rocks. They suck. They're going home. They're golfing. See you later. Now, I had to do a little plug against the Leafs because they just shit the bed so bad game seven. I should have bet the farm. I should have sold everything and bet the farm on them choking game seven at home. But here we are. We've had 595 sales in April. April is statistically one of our biggest months for sales.
Yeah.
So we're down 14% from last year, which was a slow year. And we're
Yeah.
down 26% from our 10-year average.
That's
Now,
savage.
yeah, like there is 25, 26% less business overall being done. Now, that itself is a huge shift. We talked about it last video. It was over 20% last month. Now we're seeing an even bigger jump down, and the volume of sales hasn't picked up enough. And when we combine that with the inventory numbers, we're seeing big changes, and the market is really starting to adjust to it. Whereas 3 months ago, when we really started seeing the early signs of this, the market hasn't really been pricing that in. Real estate, when data comes out, the actual changes in the market take months to actually reflect in the data. And me and Adam have talked about this before, is just like be critical when you're analyzing data, because it's like one data point isn't reflective of even a fraction of the whole story. So where Adam and I have a lot of experiences, like implications for buyers and sellers when we see these huge shifts in data and changes for what's really happening in the market. And so for buyers, Adam, this is why I brought up the Kansas City Shuffle. There's less competition and they have more negotiating power than they have in a decade. But
Yep.
a lot of sellers haven't adjusted to that new normal. So they still show a lot of resistance to what we would consider traditional negotiating scenarios and tactics. That is conditional offers, offers under asking, back and forth between signbacks and counter offers, like a real negotiation, as opposed to, hey, there's 20 offers, mine's the highest without conditions, closing the day you want. So the sellers, there's a portion of the market that's extremely realistic, but an overwhelming portion of the sellers market, both investors and homeowners, haven't adjusted to the new normal. And there's a lot of emotion that's controlling the pricing strategies, the negotiating strategies, as opposed to the reality and the data that says, hey, there's a lot of properties on the market and not a lot of them are selling. So if you do get an offer, even though it might be crap, or if you are trying to price a property to actually get offers and sell it, it may be less or it may be a different pricing strategy than what you had in your mind or what you expected. And that reflects into sellers, spending longer days on market. That's DOM for you guys. And also just an overall miss on pricing strategies for a lot of sellers. And
Yeah.
so we're seeing that by the longer days on market, price dropping, a lot of properties not selling. And so we're seeing that across the board. I know a lot of other guys all over Ontario are seeing very similar things, Adam.
Yeah. Everything you just said makes sense. When you see dramatic drops like that, the first thing I'm starting to think is as this inventory is building, regardless of the seller resistance, we know that they have a motivation to sell, or at least their intent was to sell when they listed. That's generally what happens is if you're going to list your house, you're probably trying to sell it. And that could be for any number of reasons. And the only thing I thought throughout that whole discussion there was offers. How many offers are we making?
Yes.
It that number determines your success. And I will not ever be convinced otherwise. It was the entire engine behind my business when we were aggressively pursuing getting into rental properties and, assigning properties. And the number of offers that you make is literally the number one criteria to determine if or not, like if you're going to be successful or not at getting into the opportunity that's right for you. And the offer process starts with fully understanding your goals, right? You must start with the end in mind to understand, like, what does a win look like for myself
Yep.
and how does it fit my investment strategy? And so with that understanding and that clarity, if you go into the offer process, it doesn't matter how resistant the sellers are. It doesn't matter that they have this misconception of the value of their property or that they're not in touch with the changing environment that they're in. It only matters that you make offers that are relevant to you and your goals. And so in a buyer's market like that, the real answer to this situation is just make more offers and make them at the price and terms that make sense for you and have literally zero regard for how anybody else feels about it. And that's the actual answer and recipe for success in this market, because that negotiating power is only worth something if you actually try to leverage it. And the only way to leverage it is to make more offers. If the sentiment in the market is negative about the prices that you're putting out, great, put out more, right? Find that deal in the giant number that are sitting on market, because somebody needs to sell and somebody is going to say yes. It's just a numbers problem. It's just you have to get out and put more offers out. And you can find great deals, by the way, in any market, right? Buyer's market, seller's market,
Yep.
flat market, whatever. It all comes down to what you're putting in your offers. It's the only part that you control, right? And that's the fun part about this is you control what you put on that paper. Ask for the world and you might get it.
Clip it, print it, send it. Because what we're seeing, there's two notes on that is one, there is such a disconnect between seller expectations and buyer and specifically investor expectations that a lot of investors aren't even willing to throw out offers. Two,
Yeah.
if you are giving offers or if you are considering sending out offers or you're an agent that has clients you're writing offers for, do not call other agents and verbally ask them what the lowest price they are willing to take.
Yeah. Never
Don't
do
do
that.
that.
Don't do
Another
that.
agent cannot present, work, or negotiate a verbal hypothetical offer. Put it on paper, explain why it makes sense for your guys, tell them that you'd love to work out a deal and see what you get. Adam is not saying be an asshole. He is saying throw out the offer, explain your situation, be willing to have a conversation and be creative and work with somebody. That doesn't mean bend over backwards and give them whatever they want, but that means willing to actually hear them speak their side of the story. And if they're even willing to give you that time of day, that means there might be potential to actually get something done because they see enough potential to explain their situation. So send out the freaking offers, put them on paper, and be willing to work.
The paper part, I kind of forgot to stress that. And I'm so glad you caught me on that because I've heard it so many times and I just kind of deleted it from my brain because it bothers me so bad. But there are so many people that think that calling the agent and asking them the lowest price or saying, would you take, is making an offer. That's not it, man. They have an obligation to show their client the offers you put on paper. Put it on paper because a lot of the time, the agent themselves is trying to do the right thing, right? They're trying to get the best price and terms for the client, but they don't fully understand the client's situation. And that's not the fault of the agent. That's the fault of just human nature. Like you can't know somebody's situation perfectly unless you're in their shoes. So putting an offer in front of them on paper at the right time, a lot of the time this is all about timing too, right? Like maybe
Yeah.
a week ago they wouldn't have taken that offer, but this week something happened. And now they're like, yeah, you know what? We'll entertain that, or we'll have the conversation, right? And then that's when you start the real negotiation, which is, maybe we could come up a little bit, but then sacrifice on terms, or sacrifice terms a bit and come up or down on price. There's this dance that happens once you start the conversation. But you're so right, Zach. That conversation, it starts on paper. Dude, that's
Yeah.
such a big, 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 big part to underscore. Thank you.
Got to make it real, baby. It's not real
That's
unless it's
real.
on paper. And on
Yeah.
that note, what if people are watching this video and like, yeah, yeah, I got cash. Like I think there's deals to be had out there. Here's my type of deal. I'm going to send out offers on all those types of deals that match my criteria. That's step number one. And if you don't get anything good back, great. And there's no other deals for you to offer on, no problem. You're going to circle back to everybody you brought your first offer to, and you're going to say, hey, I still love this property. I'd still love to make a deal done. Just following up, see if anything else has changed or if there's a deal to be done here. Just because they say no the first time doesn't mean they're saying no the second, third, or fourth, right? So I'm not saying that every deal out there is a great deal right now. No. But if there are deals that you're throwing offers on and you're getting hard no's, no worries. You don't have to change up your criteria. Maybe revisit your numbers, maybe revisit how realistic it is given the market conditions and your own criteria, and maybe adjust a little bit. But there's no harm in going back 2, 3, 4 weeks after you brought your first offer. Hey, just checking in. Still love the spot. Is there something else maybe we could do to work this out? Does your situation change? Like it just doesn't die with the first no. So I think there's just so much to be learned in a market like this, especially for newer investors. Seasoned investors, different story. There's a few more variables at play if you have a portfolio you're already managing, but we'll get into specific strategies. For more data in Waterloo Region, inventory's inventory. We actually freaking have inventory, but no buyers want to buy into the inventory. So 75% increase from 10-year average. What's crazy, we're going to show up the chart in the next slide, but we're a buyer's market. Like this is a buyer's market. Sellers, you have to stand out. Investors, like the old homage, be fearful when others are greedy and greedy when others are fearful. There is so much more fear in the market now than there has been, pretty much since the market tanked and took a huge sharp decline right after we were up like 100 grand and then down 100 grand within like a 6 to 8 month window. So, pretty much since then, this is about as fearful as people have gotten. The dust has relatively settled for the short term, but there's a lot of fear in the market and people are hesitating, and you can see it in buyers and sellers is they're hesitating to price their properties where they should actually sell. They're hesitating to put in offers on properties because they think the prices are so far off on what they feel is fair value. And investors are hesitating because they don't know what the short-term landscape for investment properties in Waterloo Region, Ontario, and Canada are going to be. So listen, here is the month supply of home sales. If we could blow this one up, there we go. We got it big on the screen there. For single family homes, townhouse, condo, semis, and then they combine all property types. This doesn't show multifamilies. And it just doesn't. That data is so fragmented, and specifically just in our market, the volume of those amount of deals is just really tricky to get true supply data for to give you guys like informed data. But what I want to highlight here is that top line, this one here, those are our condos.
Dude.
We have 8 months of inventory for condos. Now, condo investors, real estate investors, people that are interested in real estate and follow the data, condos will ride a much more aggressive price wave than your single family detached homes under $1 million,
Yeah.
right?
Yep.
What I mean by that is condos go through big boom bust cycles on lots of building and inventory, and there's a big laggard between when they're sold and when they're actually closed and actual pricing data on those. So there's a lot more nuances in the condo market than people may think. Long story short, they're building a shitload of condos the last 10 years because it wasn't affordable for developers and investors to build single family homes and townhouse complexes. So like shit, I can make a crap load of money developing condos in Waterloo Region because it's an underdeveloped market for condos. Let's slap them up. All right,
Yep.
financing dried up, demand dried up, prices are going to start tanking. And
Yep.
so our we have price data on this. If you guys want pricing on specific condos, I've been quoting a ton of condos for investors looking to see if they can either refi or sell and cut their losses or even break even. So if that's you, email me with your condo details. I can price it out for you, let you know what it would rent for, let you know what it would sell for. I'm going to tell you right now, if you want to sell, pricing freaking matters. And there's a lot of properties and a lot of sellers out there that may be willing to take less, or they may be in a position where they need to take less just to get a deal done. And those people are going to be dragging down the prices until the condo market stabilizes. So,
Yep.
yeah, there's been a lot of bad stuff said about the condo market and how soft it is right now, but that doesn't mean you can't sell a condo. So, what else we're seeing here too, Adam, is the majority of these other ones, your gray line, your blue line, your yellow line, and your red line, those are your single families, your towns, your condos, and your semis. The inventory has jumped up, but we're still kind of, between that 3 and 4 months of inventory for most of those market segments. That's a freaking healthy market. That's you're pretty balanced in terms of just inventory levels. But why it's a buyer's market is our inventory is outpacing volume of sales so dramatically
Yeah.
that buyers know there's 20 new listings coming up next week. So if a good one doesn't come up, they know the market is on that way to more and more inventory. So they're hesitating, they're being more patient, and there's less sales volume. So that means our inventory is stacking. Where it's not stacking aggressively is single family homes, especially single family homes under a million, right? Another market segment we're seeing not get crazy inventory is this pocket of the market in the low millions to high, basically between low 1 million and high 1 million. There's a lot of value there. And those buyers around or slightly above the price point are less sensitive to the current economic and financing landscape. What I
Yeah.
mean by that is they can afford to make the move.
Yep.
And so they're willing to pay to get what they want because they can afford those decisions. For everyday people looking to buy their first home or maybe make an upsize because they want to move into a new school district or a bigger home for the wife and the kids. All right, they may be feeling a little bit more of a pinch. That's why there's so much competition under that million price point. We're not building any more freehold detached under a million. Period. Those you cannot get a new build under a million in Kitchener for a freehold detached. Does not exist. You can get a townhouse. You might be able to get a semi, but a lot of the people looking to make those moves, that inventory is not growing nearly as quick. And then furthermore, your townhouses are a little skewed as well because Adam, a lot more stacked townhouses were getting built with the condo complexes. They're doing stacked townhouse complexes or they're doing traditional row house complexes. Freehold, sometimes they're condo fees, sometimes there are a property management fee in there.
Yeah.
So there are a lot more of those because it made sense for builders and developers to build them. So what I'm getting at here is we are so segmented in which parts of the market are moving which ways. Overall, though, more inventory, longer to sell, fewer sales, inventory stacks. Buyers have less pressure, they have more negotiating power. Sellers have more pressure to sell, to price lower, to offer incentives, to have awesome features or show really well, or use unique selling strategies or pricing strategies because buyers have the upper leg pretty much across the board, right? Now, how that actually impacts prices, pricing data is really tricky because I think it's unwise to only consider month to month pricing data as
Yeah.
it is unwise to consider month to month data in pretty much anything in real estate.
Yeah.
This is more of a quick pulse check for those of you that are either active in the market right now or considering being active in the next 6 to 12 months. So you can make, the appropriate preparations, but we're a huge mixed bag. Overall market price, average sale of any deal in residential real estate, 789. You're down about 1.5, almost 2% year over year, but we are up 2.5% from March. So
From
like
March.
we're following seasonal norms in the sense of like markets coming down during the winter and then popping back up for the spring, and then we'll take a little bit of a lull in the summer, right?
Yep.
But we're still down. So townhouses, they've taken a little bit of a hit as well because a lot of the new townhouse inventory is stacked townhouses.
Yeah.
So a one bedroom unit in a stacked townhouse is still considered a stacked townhouse sometimes.
Yeah.
Those are selling, in your threes and your fours. And then you got the 2s or the 3 bedrooms that don't have a backyard or much of a balcony and only 1 car parking. Those are selling less than what a traditional freehold 3 bedroom, 2 bathroom, finished basement backyard townhouse would sell for. So,
Yep.
you townhouse owners or investors out there, just take that with a grain of salt. But we're about down 50K on average for all townhouses, and we're down about 18K since January. So
Interesting.
your buyers and your investors, like, this price is stabilizing, like, that I don't think has truly happened yet, because we haven't seen a couple months where we've been like flat or within a couple $1,000 one way or another. We're seeing, jumps of 10 to 20 grand one way or the other almost every month now. But I think once buyers and investors find that bottom, let's call it, that may restore some confidence. But overall, affordability and short-term risks are still like very prevalent in the market. Economic uncertainty, employment uncertainty is really creeping into a lot of people, as well as just straight up affordability. Waterloo Region is still considered somewhat affordable for Ontario standards, especially for the size of the region and the cities. But like, who can afford a first home being a detached home? You're spending 5, 6, 7, 800 grand. That's a
Yeah.
ton of money. And so there are a lot of challenges, and the affordability part kind of kills me, because you see everyday people working their asses off and they're still going to really struggle to be able to afford their own home. And as an investor, like, I'm here to make money in real estate for myself and my partners and my team. And I want to be profitable. It doesn't mean you need to, be a slumlord or capitalist raider. Like, you can do the right thing and still make a really good buck. And a lot of investors are out there with the same mindset. But as somebody who works with a lot of buyers and even friends and family, it's tough. Even
Yeah.
though prices have come down, it's still not affordable. But I mean, we've had the
And
conversation. I've asked you on the video multiple times. I've asked the chat to leave comments. Like, do you think it's going to be more affordable or less affordable in 5 years or 10 years?
yeah.
I'm I'm I didn't bet the farm on the Leafs losing in game 7, but I'm betting the farm that we're going to be more expensive in 10 years.
Yeah.
Like, clip this, save the video. Someone, schedule send me an email 10 years from now, please. Because, like, guaranteed real estate is going to be more expensive in the future than it is now.
Yep.
Like, so quick hits, Adam, and jump in here if you have any, counterpoints or anything to add on. Detached still performing well. We're seeing that in most market segments, especially compared to your condo markets and your townhouses. Your market conditions just vary so dramatically. So, if you guys, I appreciate all the messages I get, but if you guys are looking at a property or have one of your own listings and like, hey, Zach, what do you think? Just take it another step further. Give me a little bit more context to that question so I can follow up with a little bit more purpose or maybe some more direct information. But like, demand varies so dramatically across property type,
Yeah.
so dramatically. There is an appetite much more strong for some listings, like your freehold detached under 1 million, right? Or your like super unique, rare locations, right? And there's softer demand for 1 bedroom condos downtown that don't have a parking space.
Yep.
Sorry, right? There's some properties that are just straight up just more desirable than others right now, and the market will change, but that's what we're at right now. Well, we're looking at stronger yields, and that can kind of balance the slower short term appreciation for you investors. And what I mean by that is, one way an investor described it to me is like, think about buying real estate as buying rental income. How much am I paying for how much rental income? Just to like put it in simple terms that even 3-year-old Zach can understand. So I can buy rental income cheaper now than I could 2, 3, 4 years ago. And
Yep.
interest rates are actually come down a little bit to kind of offset that as well. So
Yep.
if I'm thinking, the market's more uncertain for the next 2, 3, 4 years, I'm going to expect slower appreciation, but my higher yield and my lower cost per door will dramatically offset that, because today's prices are going to be cheaper than tomorrow's. So,
That has
um,
always stood out to me as a big fundamental problem with people's mental math is they don't understand that the actual price delta completely outweighs their interest rate delta. Like the delta in your monthly cost that's already being subsidized by your rental income, it has like almost no effect when you look at a real estate asset in any long-term sense. Like if you look at 2 years, 3 years, 5 years, even like by the end of 5 years, that price delta, if rates continue to go down and you bought at a point where rates were higher, is absurd. And if you need an example of this and you want to see an extreme version, look at the 90s where rates were very high and look at price of the properties at that point. Had you been able to invest at that point, as the rates came down, you see unbelievable appreciation in purchase price and or like just price. It's just not even the same thing. So, like getting in at a higher rate when the market is essentially depressed on price is so unbelievably better than trying to compete when rates are super low and prices are up. Like, it's just, Zach, this last point is so important. And I just think it's a fundamental flaw in most investors' mental math that they just don't understand. Like, oh, rates are up. It's like, it doesn't matter, man. That means the market is positioned for you to get better inventory now.
And that means you either get more selection, or
Yeah,
that just means you get more selection, which increases your chances of getting a better deal.
absolutely. And,
All it
and
is.
again, better deals are not always like price is not actually the only determination about what a better deal
Correct.
is, right? You can get a
Correct.
better asset. That's the important part.
Yeah.
It's the actual asset you're getting. What are you
Yeah.
getting for that money? And I
Can
think
I get a
that's
better
really
quality
important.
asset for the same price, or can I get the same quality asset for a much cheaper price? Either
Exactly.
way, I'm reducing risk or I'm improving potential for appreciation or growth. And like you said, just like I want to, I'm glad you hammered down on that point. The thing people need to remember is like real estate is not a get rich quick scheme. This is a get rich for sure. And a lot of human nature, they're just not okay getting rich over a long period of time. Like if you buy a good asset, and what we mean by that is like a property that is in a location that will provide the things that you need, whether that's easy to rent or above average appreciation or ability to add value, right? Will be able to allow you as the investor and the holder and operator of that asset to improve the value or maintain the value even. And you can just do that for 10 years, 5 years, 10 years, 15 years, 20 years. Like how much better it gets the longer your investment horizon
Yep.
is just like crazy. And I'm saying that now because I've been in real estate for 10 years. I've been in real estate for a decade. And even I've seen it. And you're just like,
Yep.
oh shit. Had I known what I know now,
Yep.
and we'll be saying that till
Yep.
the cows come home. All the investors and real estate guys and girls that I like and follow and really learn from, they're saying the exact same things, but it's just
Yep.
like the longer time horizon you give yourself, the increased chances of success and less risk you have. And like Adam said, you're paying a little bit more for mortgage financing now, but you get today's price.
Yeah.
Like prices are going to go like this, yes, but in the long run, they're going to go up. Interest rates, if they go up, they come down
Yep. Every time.
every time,
Every time. It's
every
like
time.
guaranteed.
So,
Yeah.
don't sweat. Like, yes, pay attention to that. Consider it into your decision making process. But like today's prices are getting sexy. So let's get into some sexy prices. Smaller and bigger deals, like the bigger deals have been working for years. The smaller deals, not so much. Basically kind of 22, 23, 24 is when in my market, our smaller deals were, typically break evens. Whereas a lot of people were coming down to Waterloo Region for cash flow. And inventory was so tight, prices came up so quicker than rental income, and rental income came up quick. Um, you know, not going to address the rent control issues for properties in Ontario. But like there was good assets, but you're not making a ton of cash flow, and that's okay for some investors. But like we're seeing duplex, triplex, fourplexes on market. You could just buy with 20% down, and you could be making 500 to a grand a month, especially if you're managing them yourself or you're house hacking it and living in one of them. So like people weren't getting that kind of cash flow 3, 4 years ago. So you can get it at a cheaper price now, and you can be up more on a monthly basis now. And investors are still hesitating. They're still hesitating. For reference, there's been 17 sales on market for multi-units, 4 units and under in all of Waterloo Region in the last 3 months. We're talking like 5 a month, 6 a month. There's 109 of them on market right now. Personally, I have inventory right now that is cash flow positive with 20% down. There
Damn.
are about 10, 15 deals without even looking, I know offer positive cash flow on market right now that you could just go in, take over, get a decent loan on, and you're locked and loaded to make, 500 plus a month as is. So, where are my buyers at? Where are my
Yeah.
investors at? We have a lot of people that are poking around, asking questions about listings, asking about deals, starting to kind of see the light at the end of the tunnel. Now that inventory is really bumped up, they see that there may be opportunity to negotiate favorable price and terms, but like there are deals to be had out there. And there are also a lot of people on our back end that have inventory that would like to connect directly with another investor, right? So you save time, energy. You're not pissing off your tenants. You're dealing with somebody that's serious and qualified before they even come through the property or start negotiating an offer. It's really common for properties to get, go to the offer stage, get an accepted offer conditional on viewing units as well for tenants. So like you're not disturbing tenants. They don't get freaked out. You're selling the property. It's a little bit cleaner and quieter. Like this is a world that we operate in. There's a lot of people poking around asking questions, giving us deals, giving us prices, saying, hey, if we get a buyer for this, we get a buyer for that. Here's the prices we can do. So dig into the investor hot list or send me a personal message on that. Now, the 6+ unit deals, Adam, they're more rare, period. They're just less of them. And a lot of big money has started kind of combining and assembling these smaller deals in the market. And say there's going into Kitchener, they want to buy 500 units in a Kitchener. They're not buying the sixplexes, but maybe
Yeah.
they'll take a look at a handful of the 12s, the 15s, the 20s from one buyer or a couple of different sellers. Sorry, one seller or a couple of different sellers that are all connected. So these 6+ unit deals, the value add shit on that, super tricky right now. You're fighting tenant risk. You're typically dealing with a lot of tenants that have been there for longer than 3, 4, 5 years and have depressed rents. That's a problem in itself. Now, the boring buy and hold, though, that is back, baby. That is
Yeah.
so back because prices have come down a little bit, competition has come down a little bit. So buyers can actually do legitimate due diligence and they can get decent financing because there's programs out there for those of you that want to improve efficiency or are willing to take on units that have affordable rents. And
Yeah.
lenders, they want your business. The lending
Yeah.
markets are slow as shit.
Yeah.
They want your business. You can negotiate with lenders again because they need to sell more loans because the lending market has been slow as hell because nobody is buying and selling properties right now. So, like, I just see this storm for investors, and there's so many of you that are sitting on the sideline. And I'm not saying this is the perfect time for everybody, but like there are deals to be had more so now than we've seen in the last 2 years. And people are sitting on the sideline. So if you're wondering, hey Zach, what do I need to get into a deal? Look, for these duplex, triplex, and fourplexes in my market, you need minimum 50K cash. That is an absolute bare minimum. Like you could do VTB, you could do creative financing, but traditionally speaking, like you need to have a little bit of cash, straight up, right? So this would typically be for like a 5% down, live in the property. You have more control and more flexibility, and it's a good starting point in these 2, 3, 4 unit properties to get some experience in being a landlord, doing everything you need to do as an investor without going on and taking on a 20-unit apartment building. Now, if you want to go do a 20-unit apartment building, I'm not discouraging you, balls to the wall, send it. Like I totally believe in pushing yourself and trying to learn things. But if you're looking to get started or you have a primary residence and you want real estate to be a part of your retirement plan or your plan for your kids, picking up a 2, 3, or 4 unit property in a market isn't a terrible look. And I'm seeing deals now, especially as sellers get a little bit more motivated. Those 6+ unit deals, typically you want to see the 2 to 300K or have a couple partners that are going to be putting some cash into a pot. These are slower deals. Take longer to find, take longer to negotiate, take longer to really capture gains from these types of properties, but higher upside and less risk for a lot of different reasons. And these are a lot of generalizations, Adam. Like I just wanted to give people a starting point. If we got any newbies in the video, like just something to start from for these types of deals. And on that note, we're going to do quick hits for deals, and then we're going to bring this one home. This one, this is a 5 residential unit, 1 commercial unit, prime location, lots of parking, close to downtown, and it's got storage, tenanted, long term. Like this is a perfect opportunity for investors that one either have specific experience in commercial mixed use, Two, an investor that needs a commercial space either for an operating business that they operate, which is huge value add, or somebody that's looking for a little diversification from straightaway res. Like if you don't
Yeah.
want just all residential stuff, right? Asking price 1399. Properties on the market right now. DM for details. Legal duplex on the market right now. Totally renovated in 2021. That means the basement unit is not under rent control rules and regulations. We got
Nice.
parking for 6, single detached garage in the back. Interior is mint, 10 out of 10, in suite laundry. Very good space to like live if you're an owner occupier as like a family. Like you're by everything, quiet side street. But also if you just want to use as a buy and hold, like walking distance to LRT, walking distance to the mall and the bus station, like convenient, can get pretty much anywhere in Waterloo Region in 15 minutes from here. So I like that spot. This one, another duplex. Like these types of properties were selling close to a million a couple of years ago, guys.
Yeah.
And we're in the eights. And these are like nice duplexes. Like this
Yep.
isn't just like, you know, 6 out of 10 condition, 6 out of 10 location. Like these are like good duplexes. 839.9. This one's in Forest Hill, completely updated, legal, 2 bed up, 2 bed down, big boy backyard, nice neighborhood. 839.9. And then we got a fourplex here. Under a million, we're under 250K a door on a fourplex that has well over 4,000 square feet of living space, like 1 bed units, 3 bed units with a loft, 2 bed units, tons of parking, private
And parking.
backyard. This one I like for like an owner occupier or an investor that have family because the units are so unique. So if you need
Yeah.
like a main floor unit for somebody that has doesn't want to do stairs, either elderly or mobility issues, or you need a big 3 bedroom unit for yourself and your family, like this has got a little bit of everything. Like
Cool.
big property, huge square footage for the price, and then large detached. So we're seeing this more so in the new builds, Adam. We'll see like 2,500 square foot, 4 bedrooms, double car garage, and then they'll actually just set up the basement to make it a legal secondary suite after the building's complete. Or builders will even just build them as duplexes.
Yeah.
This is so common for families to need large living spaces but not need like a basement or use the basement for family, right? Rent out the basement for 1,800 to 2,200 a month. That'll help offset the cost of what like a new big house is going to run you, or you just utilize it as a large family. And this is kind of
Yep.
the perfect fit for that. The new ones are going to be like 1, 2, 1, 3 easy. This incredible value for the price. It's a big house. So we have off market deals as well. I got an off market fourplex, off market triplex in the roster right now, ready to rock and roll. We got 2 other deals coming up on the market next week. We share all those on the investor hot list. And when me and Adam do these video guys, I'll share the quick hits for any data that I have from the video on my investor hot list. So if you don't want to watch the whole video, you get the Zack notes. And if there are changes in the local landscape, I like to send links or I like to send kind of my own little commentary on things that we're seeing. Cause like me and my partner Matt, we're out there, we're showing homes, we're price checking properties for our investors all the time. We're working with everyday buyers and sellers, so we understand the pulse of the struggles, but also where people are finding success. So like, don't be a stranger if you want to get on the hot list. And like, I'm an open book. If people need to book a call and get pricing on properties that they own or properties that they're trying to consider acquiring, run through your numbers with me. Let's set up a search. Let's get cooking. Because, like, if you're looking for a specific deal and you're not finding it, all right, we need either just how you're looking and what you're looking at, or have an honest conversation about your criteria and how realistic it is. But, like, you're not going to find a deal unless you look, and you're not going to get a deal unless you throw in the offers. So, if you're not looking at the right properties and you're not throwing the offers, people like me and my clients and my partners, we're going to be scooping up all the good deals. And that's what we're doing right now. A lot of our people are really starting to, add some assets to the book. And I'm seeing some sexy deals. So if you want to get on that train, guys, send me an email or get on the investor hot list. But I think there's a lot of investors that be coming off the sidelines pretty soon.
That's awesome, Zach. Well, I really appreciate you coming back on the channel today. I love the candidness of our discussions every time. Just the integrity right behind really walking through the various segments of the market and just taking a really sober approach to like where are we at when it comes to price, inventory, the different segments, what kind of strategies we could employ looking at that data and like really what it means. I think the so what always comes out in our videos, and
Yeah.
that what makes me feel like this is really fantastic for not only me but for the audience. So I appreciate you coming back on today. It's fantastic, and look forward to seeing you back here next month.
Good luck for the rest of spring, ladies and gentlemen. We'll see you guys soon.
Excellent. Thank you.